Let's get straight down to business. The top story today continues to be the clampdown that you're seeing from China on tech companies. It all started with what happened with Jack Ma and Alibaba Group. That was then followed up later by the stupendous listing of Didi in United States as a taxi aggregator, which has now lost more than 50% of its market capitalization since China said cybersecurity breaches at Didi are being studied and that it's looking at penalties for Chinese companies listed in the United States. Then you had an onslaught against the edtech companies, with reports suggesting China may ban edtech startups from making profits. They should not be for-profit companies. Then, one statement alone, that there should be larger oversight on for food delivery partners with respect to their social security, sent the food delivery companies in a complete tailspin. It is also said that Tencent should not be enjoying exclusive access to music. So while the jury may be out on why China is doing it, the very fact that China is coming down hard on consumer internet companies cannot be denied. And you have seen shockwaves across the globe. Let's look at Hong Kong and the Hang Seng Tech Index. It's lost $400 billion in the last 3 days. It is trading at the lowest level since its inception. So whatever China is doing as a clampdown on Chinese consumer internet companies, what does it mean for foreign capital? And what does it mean for India? Is it a big advantage for India? You talk about Didi, the taxi aggregator, losing 50% market value since IPO. Look at Zomato from India. It's up 50% since its IPO. Yes, it's only 3 days, but that is how it is. I'm going to be discussing what we're seeing in China and what it means for India with two experts joining us live from the United States. They've woken up really early to be a part of this live broadcast, and we really, really appreciate it here at ET Now. We're being joined by Ray from Constellation Research as well as Brad from Wedbush. Thanks, guys, for making it live. I really appreciate it. Not possible to do these recorded interviews when things are happening so fast. Ray, let me come to you first. How do you make sense of what China's doing to its consumer internet companies? I know there's a, there was a newsletter yesterday that went completely viral, which said that, hey, you've got the wrong definition of tech. China sees it completely differently.
Yeah, no, we're definitely seeing something different here. Basically, the Chinese Communist Party is basically exerting control over the big tech giants over in China. Part of the reason for doing that is they don't want the big tech giants to be seen as above the law, bigger than the government. The other piece that's going on right now is a squeeze on Hong Kong, but it's also, more importantly, it's talking about fairness and equality and how the government is helping the people. But what's really going on is a destruction of almost $1 trillion of market cap that's going on right now with all the big tech companies and with capital just fleeing China at the moment. So this has been crazy to watch, but it's really about the Communist Party exerting their control over the big tech giants, the leaders around the big tech giants, and also around the princelings who are running those companies.
So let me come to you now, Brad. Ray saying that you're seeing capital flee China. It's certainly fleeing the Hang Seng at the moment. Can it be advantage India? Is India the next obvious choice when this global re-benchmarking takes place?
Well, certainly for emerging funds, I mean, those dollars need to go somewhere. And if you're looking at growing economies, India certainly has the pedigree and the opportunity for significant growth over a number of years. So you certainly would be a net beneficiary. I think, as Ray said, this is unprecedented. What we're seeing right now is really just throwing everything out. But the reality is things can get worse because you just don't know what's going to happen from the government. So with that, India likely is a beneficiary. Will it be the biggest net beneficiary? Probably one of the bigger ones. It's hard to say how much allocation we'll get.
But Ray, what is it also going to do for valuations? I'm also asking this question. We in India had a very successful IPO of our first unicorn that happened last week, 60% premium on day one. It's still trading at a 50% premium to the listing price. But we've got a bunch of unicorns in India that are headed to the Indian stock markets. But with this kind of turmoil that's taking place, how are these companies supposed to benchmark and figure out their valuations?
I'm really excited for India because what's going to happen is rule of law, being able to have a stable government, having the right economic conditions means capital. I mean, basically, it's a cap table raid on China. What's going to happen is the market caps of those Chinese stock companies are going to come into India for those that are doing foreign investment or that want to be able to tap into the startup scene in India. And if you look at the tech talent on software and the tech talent in general, India is one of the big shining stars in terms of the ability to provide that kind of tech talent, as well as the startup scene, and of course, one of the world's largest markets. So I think it's good for the startup scene. It's good for the valuations. You will see a flood of valuations in general because there's a quadrillions of capital sitting on the sidelines with nowhere to go. So whether it's mergers and acquisitions, whether it's funding new startups, you're definitely going to see that capital flow come in. Part of the reason is also in the U.S. what we're doing is a crackdown on big tech, and so we're going to see a stall in mergers and acquisitions. You saw what happened to Aon and Willis Tower Watson. They basically got stalled in that deal, and you won't see tech companies being able to do large acquisitions. And so what they're going to be trying to do is invest in other regions where there are more friendly policies, more friendly policies for startups.
Ray, if I can now come to you, you made this case about how capital is fleeing and how just you heard Ray also say we don't know when it's going to stop. You've got a different kind of a crackdown that is taking place in the US where, as an outsider, as an observer, it seems more about maybe limiting their political hegemony. But in China, they don't have to worry about companies having political influence. But nevertheless, you're not seeing the kind of ramifications one would expect on Wall Street and the tech companies. Why is that?
So I'll jump in here. So in terms of the implications, I mean, they're very big, and I find it hard to believe. And actually, you are seeing some impact already to some stocks that have high China exposure. It's really unable to predict what's going to happen next. Will China do something? Will they block U.S. goods? Will they all of a sudden have some more regulations for the Chinese listed companies? All of these are very likely going to take place. I think when you look at valuations and you look at what you talked about earlier, the Chinese market is very independent. It's not going to change anything else from other global markets. Global markets are going to get very good valuations. As Ray mentioned, there's a lot of money on the sidelines. It's got to go somewhere. It's going to be reallocated. And there's some very good technology growth drivers over the next 4 to 5 years. So you're going to see some significant growth opportunities. They're in different markets, but there's a big appetite to invest in them.
But Brad, will you see investors dump stocks or be wary of stocks which may have the likes of Alibaba and Tencent as investors?
You're certainly seeing a rotation out of anything that has Chinese tech. And if there's exposure to China, there's also most of these companies are being sold as well. So depending on how much exposure to the region, along with if it's a Chinese company, the Chinese company, right now investors are selling. If it's a company like an Apple that does drive a lot of iPhone sales in the region, there's a lot of people looking at what will Beijing do, and will they, bite their nose to spite the face? They employ over 1 million people that are involved with iPhone production in China. Will they do something to disrupt that? I don't think so, but it's certainly you have to be, wary about what could happen in the region.
Yeah, I would say it's a great point too, because this war on the West is
Ray,
starting
I know
to happen.
you follow.
Oh, go ahead.
No, go ahead.
I was going to say the war on the West is actually happening. We saw it with H&M. We saw it with Nike. We saw, with companies that were actually cracking down on the human rights issue. The trade talks that recently happened were pretty uneventful. I think China was expecting the U.S. to kowtow to them for some of their demands. There's a prep, around protecting Taiwan from, any kind of invasion from China. I think conditions are looking pretty bad. And what it means is basically Xi is in a position where he's trying to exert control and put the party in front of, what's going on inside the country. And that's actually creating conditions like this, where people are just cracking down, just to exert control to look like they're in control. But what people should be really looking at is that the real estate market in China is a house of cards. And we'll be starting to see that impact as, foreign investment starts leaving China. So this is a very dangerous game that's being played at the moment.
Ray, I know you follow India very closely, and this is my final question for this discussion, which is that India is the third largest startup ecosystem in the world, but it's a very distant third. China, for example, has 4x the number of unicorns that we have. But 2021 so far has been good for India. Record fundraise, we minted 16 new unicorns, one of them has been listed. What should India do to become even hotter or a more favorable destination for all of this nervous foreign capital?
There are a couple of things definitely can be done. I think the first part is, provide more incentives to startup companies to be able to plug into larger ecosystems. I think the government can actually help by actually evening the playing field with the big tech giants and their interest in coming into India by making sure that there's a good amount of foreign investment along with local investment. I think that will help as well to guide people through the regulatory environment in India. But I also think it's also about helping people see that this is a path to growth for the country and helping to play allow the tech companies to showcase where there are opportunities for pathways beyond what was gone with the IT services business, beyond what's going on with tech in general, but really to show that this is a career path for anyone who's starting out in their careers. They'll have a huge opportunity to create that wealth cycle.
Okay, with that, Brad and Ray, thank you so much for making the time out and joining us live on this edition of Startup Central. Unprecedented times. Everyone's got different theories on why China is doing it, but I think there is consensus that it's a very, very dangerous game. And right now, anything that has exposure to China is considered very dangerous.